40% returns in 5.5 months. On YouTube or on Twitter, hardly there are very few people who go back and review stocks that they discuss on their channel on the social media. So I do this. I've been doing this for the last couple of weeks, last few months, and I've covered quite a few videos on the past stocks that I've covered. And today we're going to also discuss a set of stocks, IPO stocks that I discussed a few months back. Hello, welcome to Trend Invest channel. So here we discuss a lot of ideas on technical analysis, especially how to use those concepts to invest or trade in the stock market. Okay, so in today's video, we're going to focus on the stock review from the 19th of April. But I don't cherry pick stocks that I want to review. I review them in a sequential manner. So I started this a few months back. I started reviewing the March videos, 12th March, then I did 19th March, 26th, 2nd of April, and 9th of April. And today in that series, we're going to discuss the 16th of April videos that I covered. I covered 6 stocks and we're going to review them. So I do one stock video every week, and that's why you see one stock video here, which I'm reviewing every week. So there is no bias, there is no cherry picking, and I'm going to teach you the reality of markets by reviewing how the trades that I discussed are performing. So let's get started with today's video, where I have 6 IPO stocks. So all these stocks were recently listed in the last couple of years, and how do you use this technique of short consolidation or higher high or breakouts or reversals? How to use these concepts and how do you trade them? So in case you had invested in these IPO stocks, you would have made around 40% returns in 5.5 months, and thanks to the markets have been excellent. I have no worries in giving the benefit to the markets, but I believe in selecting stocks with the right risk reward, and that's what I'm going to teach you, and that's what I'm going to discuss in this video. So Rategain had a 70%, Policy Bazaar 30%, Rainbow Shitten had 37%, Latent View was one of the underperformers with 11%, Glenmark Life Sciences had 50%, and Devyani had 42%. Right, so if you had invested 10,000 each, you would have probably made around 40% returns in the last many months. Right, and a lot of stocks are still doing well, and they are still performing quite well. So let's get started with the first stock, which is Rategain. Now, the reason why I chose Rategain is it's purely because it made a new higher high and then retested that zone and then it was reversing. Right. So this stock was listed in 2022, and this stock was in a clear downtrend. You can see the pivot points going down, and then it went down again, and then we had a breakout. Now, whenever a stock breaks out for the first time and goes higher than the previous pivot, that shows that the stock is outperforming and the stock is gaining momentum. Right here also, if you see, CCI is an indicator I use for momentum, and rate of strength also is an indicator I use to check whether the stock is outperforming the markets. Right, so we had a move up and then it came down, retest, and then it reversed. Now this was the chart I had on the day of 16th April. So how does it look today? So here was the first time I covered the stock on this day, when we had a nice move up and then the stock was almost at this point. Right, so it had a breakout, then it had a retest, and then it went way up. Now one point to look at in a stock is, if you have a stock candle like this which has open equal to low and the stock went all the way up, now that's probably a zone where the stock will reverse again from, right, in case it goes down, and that probably indicates that the stock has bottomed out. And if you look at the left side of this zone, you see also that is a retest zone. Right, so a best buy would have been there, but the nice part of the stock here, and the stock also was at the previous zone here. Right, so if we had bought the stock here first time, we had a very good closing. Now initially, when you take a position, I always say start with a 5% position or something that is more suitable for you. But don't go full into the stock, because there's a chance that the stock will hit your stop loss. So you do not want to lose much. Right, now in this case, we had a stop loss of 13%. So you took a 5% position size. So stop loss 13%, you wouldn't have lost much. But moment the stock had a candle like this, especially if you're a swing trader, you can add more to the stock and trail your stop loss here to this point. Now, that's what I called a very low risk setup. The probability of your stock going down is there, but in case the stock works out, then you tend to make big gains. Right, so in case as a swing trader, these are the points where you can pump up, add more to your stock. Right, and then for the first time, the stock closed above the zone with a very good weekly candle, a green daily candle here, and the stock closed above that zone. Now, whenever a stock closes above a zone when it was rejected at least twice. Now you see there are 2 points here where this price rejected, and third time also here somewhat, and then the price closed above all these points for the first time. Now, that's a very strong sign that this stock is outperforming. And remember, the stock trend changed here. We are going up and it came down and again going up. So overall the trend is up, and this is a very good point for you to add and make this position at least a 10% position size for a swing or a positional trading perspective. So in investing, you can do that. It's up to you. And then the stock went up again. It came down, kind of retest. Now, a lot of people would exit the stock because they say this is a breakout failure. I agree it's a breakout failure, but the trend still remains up. So until the trend remains up, you have to stay put in the stock. You have to, if you're looking for a positional or swing trading perspective, swing trading you can probably book somewhere here. It's totally fine how you book it. But if you're a positional trader, I recommend to not sell your stock when a breakout fails. Right now here, the trend is still up. So unless the pivot points keep going higher, you should not be selling the stock. So this is something that I tell everyone. In a stock, it is an uptrend, you should not be exiting the stock and wait for the stock to break the uptrend, right? So until now, the stock is clearly an uptrend. You see the pivot points are still trending up, right? And then we have again our nice beautiful consolidation and a nice beautiful close. So again, the pivot closed above this point, so which means the trend is still going up, right? So you stay put, and if you want, you can add more here and take your position size probably to a 15% position size or even 20% position size, because the trend is maturing. Now, whenever a stock starts first time after a breakout, when the trend is just changing into an uptrend, it tends to consolidate for a long time, right? But when the trend starts maturing, you will see that the consolidation gets shorter and shorter. Now, this is a very, very important point for trading, right? So whenever you see a trend consolidation getting shorter and shorter, which means the trend is going to mature and it's going to pick up pace and it's going to head higher. And that's exactly what happened here. Now, compared to these three, this is a really big consolidation, and this is a small consolidation relative to this. And finally, we have a much smaller consolidation, and now the stock is picked up real pace. And then the stock is now again consolidating much higher, right, for a much longer time, because now we had a massive gain. All that consolidation led to a massive gain, and now the stock is again consolidating, right? Now, in case you are afraid to give back gains after such a crazy move, and right, you can also trail your stop loss to this swing low, even though the pivot has not yet formed. Now here I'm using the pivot 10 10 10 10 to plot this, but if you want bigger gains, you should follow the pivot indicator. So let the pivot form, and then probably you can trail your stop loss. So for now, if you're a swing trader, probably you should have booked somewhere here or even here. But if you're a positional trader, you tend to ride the trend as much as possible, and that's how you end up with 70% returns in Rategain, right? So that's short overview on Rategain. So it was entry was 358. Target was 475, but we've always gone much higher. That's why I always say ride trends for maximum gains, because you never know which stock will give you much higher returns, right? So if you have a portfolio of stocks, and if you're an investor or a positional trader, you need to let the trend go higher and higher. So that's the first stock today. The second stock is Policy Bazaar. Again, a simple setup, a higher high for the first time, and the stock has been going sideways for many weeks over here. And that's pretty much why I took this stock to discuss on the 16th April. So again here, if you see here, the daily charts, so we had this nice consolidation going on, and I covered the stock somewhere here at this point, right? Ideally, the best entry point would have been here, and then you get to add more at this point, but it's totally fine. You can also add the stock because it's still very early in the trend, and you could have bought the stock somewhere in this consolidation as well. So here I covered it, and we had a nice consolidation, and then we had a breakout, right? Now here you could also add the point, you could also add more here when the short tight consolidation had a breakout here, right? Or you could also add this above at this point here when we had the first higher high here, right? 55.6 was the point, and then we crossed above this point. You could have added here, or you could wait for a close and also add at this point over here, right? It's up to you how you want to add the stocks. And then now we are still going up and up. The trend is still up. You see the pivot points are trending higher and higher, which means the stock is still outperforming, and the stock is still in an uptrend, which means you can continue to hold the stock, right? The next possible point to add or to buy fresh entry is above this point. So above 815 is when you can take a fresh entry if you want, with the stop loss on this point, or you can add more to your position as well. So that's the Policy Bazaar, where we had entry at 584, target was 850, but today we're at 762. We're almost there, and this is the second stock from the IPO list that we discussed. The third stock we discussed was Rainbow's Children. Now this was slightly pretty late entry, because ideally the first entry should have been here, but then I waited for the stock to consolidate it, and I found the stock here. So I was expecting the stock to break out from this nice, beautiful long consolidation over here, right? Almost December to April, almost 6 months consolidation here. And that was a very good breakout, which also gave good returns, right? Now, one thing I want to note is, until the trend is up on the weekly charts, you can always buy any pullback on the daily charts. It will most likely work out until the trend is up on the weekly charts. Okay, so let's move on to the daily chart here. So I covered this somewhere on this day. After this close, it was a nice, beautiful pivot, and the stock closed above that zone over there for the first time, right? Now that shows the stock has closed this, is probably breaking out from the strong pivot. And we had also the next day, immediate next day, we had a very strong closing, which was basically a close above that nice zone over there. So overall, this was a beautiful setup to trade in, and we had ended up with 37% returns. And then a short consolidation, you could have added more here around this point, right? Just 2-3 weeks of consolidation, you could have added more here, and then again the stock went higher. Again, a point to add over here again. You could have added more, or you could have not decided to add more as well, and you could have added more here as well. But overall, first entry here, second entry, first entry here, second entry here, third entry here. I usually say don't go beyond 3 entries. 3 entries are more than enough. And if you have a portion size around 20%, it's more than enough. Do not add more. So, because the reason I say is because when trends go up and up, usually the trend starts to go sideways, or it goes into a long consolidation after the third base. Right now, this is the first base, second base, and we also had third base here, and already the stock started consolidating. The same thing happened here as well, right? So this was the first base, then you had second base, and then a third long base, and then here the trend starts to go sideways, and then it probably will take 3 to 6 months, sometimes 2-3 months also, and then it you might be stuck in a stock which is going sideways for a long time. So that's why I tend to say, if you have a big position size around 15-20%, it's more than enough. Don't go beyond that. Even if you're a position trader, it might help you to just stay, not to get stuck in a stock with a big position size, right? So that's Rainbow Children. We had a 37% return. 760 was entry price. Target was, sorry, the stop loss was 690 and target was 1000. So we are right now 1041, which means target has been achieved, right? So that's the first 3 stocks. And if you're enjoying this video, do let me know in the comments if this really helps, and do share this video with your family and friends. And you can support me by buying me a coffee using this link in the description section. Okay, so thanks for your support. Let's move forward with the fourth stock, which was Latent View Analytics. Now, this was not really a great trade. It was one of the worst performing trades of the 6 trades. So again, I was expecting a reversal here. The reversal did happen, but then the stock kind of rejected and came down. We look at that here. Kind of stock kind of went higher, then it kind of had a breakdown, a gap down, and then kind of went sideways. Now, I also covered this in one of the other stock review videos. When a stock is in an uptrend and a gap down happens, I think it was Cochin Shipyard, I don't remember really, but when a gap down happens with massive volume, do not sell off. If you're a position trader, if you're a swing trader, take a decision. If you're a position trader, do not sell off. It's most likely that that's just a panic sell off in an uptrend. Usually this happens, right? So here we had a breakout on this day. I covered the stock somewhere here, a nice move here, and we had a breakout. You could have added here and taken your position size higher with stop loss still here, right? And then a gap down, and then again stock went high and closed above that point over here, right? So you could have added more above this point because we closed above that point again. So that was a panic sell off. Now the same thing happened in Venky's. We had a crazy drop in the stock, and then the stock again reversed. So that's why I say do not sell off a stock when a stock is in an uptrend and there is a crazy big red candle. Okay, then we had a breakout again here. You could have added more on this day or on these days, and then the stock is trending higher. So for me, the pivot point is still not yet broken, so which means the trend is still up. The uptrend is still up. This is a small pivot. I would not consider this as a major trend change, but for me, the weekly charts still look very good, and the stock can still head higher. So if you have not bought this yet, it's still a good time to buy the stock. The fifth stock we discussed was Glenmark Life Sciences. Again, a beautiful setup. You could call this a 1-2-3 setup that I love. So here again, stock was in a downtrend. The stock came out of the downtrend, and then the stock went sideways, but the pivot points were still trending down. Right, and I expected this stock to reverse because we had 1 touch point, 2 touch point, and 3 touch points, and we had long lower wicks, which meant that the stock is taking a very good support. It has a lot of demand around the zone, and the stock kind of reversed, right? So I was trying to play this breakout over here. I was a premature entry, but it worked out really well. We had around 50% returns in the stock. So we covered the stock here on this day close. Again, as I said, the stock had a gap down, but then reversed here, which means the stock is looking for a very good demand. Also, this open equal to low, that candle was open equal to low, which means the stock again found reversal multiple times, and then again we had reversed. Also, look at the volumes. The volumes have been pretty good around the zone, which means there is a huge accumulation happening. And if you combine that with the weekly chart, there has been amazing wicks here, which shows that there is strong demand. Right, so this was the buy point here, and then we had a nice close above that resistance zone over here, which means it was a good point to add more to your stock. And probably, if you don't want to add, you don't have to add also. But this was a very good entry from IPO base. And then we stock had a gap up here, and again a nice close above the pivot point. Again a nice close above the pivot point, points to add, and again we have a nice resistance zone over here and a nice support zone over here. So you can tell your stop loss to this pivot point right now and expect the stock to break out on the higher side. Okay, so that's the fifth stock we discussed, Glenmark. Entry at 417, stop loss was 370, target was 600. Right now we are at 625. Okay, the last stock we discussed was Devyani International, a beautiful trade that happened very nicely. IPO base breakout was here, then we took support once, twice, thrice, and 4 times. Now, whenever a stock reverses multiple times from the same zone, especially if you have such a strong green candle, then it's a very good entry to buy, especially when you have follow through weekly candle. Right now, that's why I covered Devyani here, and it was a beautiful trade with 42% returns. Again, I covered this this day here at a close. The stock kind of took resistance here for a short time, and we had a breakout over here. Right, a good point to add to your positions, and then we had a beautiful uptrend all the way up. Right now, look at here, look at the consolidation that's happening here. Now we had a breakout here, went all the way up, the stock consolidated, again we had a breakout here. But after this, the stock went sideways for many months. Right now, after a strong bullish candle, when a stock goes, all the price action is inside that stock zone. That's a very good setup for you to take a trade when we have a breakout again. Right, you can also take a trade here or here, but it's up to you how you want to handle your risk. But if you see a big green candle here, then that's a very good day to add to your positions. Right, so that's Devyani International, 156 entry, stop loss 130 and 215. Right now we are at 22 levels. So that's the 6 stocks that we covered. Beautiful setups, beautiful learnings from this video. In case you did like this video and the learnings, do let me know in the comments. I hope you want more such videos, and if you want to, let me know in the comments as well. Otherwise, I'm going to leave you here. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.